Welcome to The Explainer. Today, we are diving headfirst into real estate investing, and we're zeroing in on Detroit, a city that's famous for both its massive risks and its incredible rewards. We're going to break down the investment model from the BNIC network to see how they say they've cracked the code to making money in this market.
So let's just start with the big question, right? It's probably on your mind. How do you actually get that sweet passive income from real estate without getting totally burned? I mean, the dream is awesome, owning a property, collecting rent, but it usually comes with a giant dose of risk, especially if you're trying to invest from far away.
And yeah, that risk, it's the #1 thing that stops people. If you're an investor living states away, looking at a city you don't really know, well, the fear of making a huge mistake can keep you on the sidelines forever. Who do you trust? How can you be sure you're not getting a raw deal?
Well, today we are looking at a model that says it has solved that exact problem. It's a system designed to deliver those high returns you're after by putting a professional risk management team on the job for you. The whole idea is you can invest with confidence even if you're thousands of miles away.
Okay, let's get into the nitty-gritty. To really get this model, you first have to understand the city at its heart, Detroit. It's a city of total contrasts, you know? A place with unbelievable opportunity, but also some serious challenges. It's been a super hot topic in the real estate world for years now. According to our source material, Detroit is the #1 market for single-family rentals in the entire country. Now that is a huge claim, and it's basically a giant magnet for investors everywhere. But what does that really mean for someone like you?
Well, it creates what you could call the Detroit dilemma. On one side, you've got this incredible promise of cash flow and returns that are just impossible to find anywhere else. But on the other side, you've got the danger of being an outsider. As the source puts it, you can get hustled if you don't have the right people in your corner.
And what's really fascinating here is that this slide puts some hard numbers to that promise. These are the typical cap rates, that's basically the rate of return you can expect, in Detroit. And just look at those numbers. We're talking 10 to 15%. In most other big U.S. cities, that's almost unheard of.
So, how do you solve the dilemma? How do you get that amazing reward but dodge all the risk? This brings us to the very core of this model's solution. You need an expert team that is physically on the ground in the city working for you. The whole approach is built around this proprietary system called the REDMDS. That's the Real Estate Deal Management System. Think of it as a complete playbook that they use to check and manage every single part of the investment, from finding the property all the way to managing it day to day.
And this right here, this is the engine that makes it all go. It's not just one person, it's a whole network of local pros. We're talking rehabbers, agents, inspectors, people who know the Detroit market, not just by zip code, but literally block by block. They are your eyes and ears on the ground. Okay, so you've got the expert team in place. How do you actually make some money? Well, this model offers two very different paths to choose from. Each one is tailored for different goals, different comfort levels with risk, and frankly, how involved you want to be. So the first choice is which path is for you. Are you a retail investor who's just looking for a super easy hands-off income stream? Or are you more of a traditional investor, someone who wants to be more active and flip properties for a quicker, bigger profit? Let's break them both down. The retail investor path is all about something called turnkey properties. And the idea is really simple. You buy a property that's already fixed up, already has a paying tenant inside, and already has a management company handling everything. You literally just turn the key and start collecting rent checks. It's designed to be totally hassle-free.
And here's a look at the numbers for that retail path. For an investment somewhere between 75 and 107 grand, you're projected to get about $7,500 a year in net income. That works out to a solid 7 to 10% cap rate, which for a totally passive investment is pretty great.
All right, let's switch gears to the traditional investor path. This one's for the person who's a bit more hands-on and is chasing a bigger, faster payday. For this flip model, the entry point is lower, starting at just $50,000. That money covers buying a distressed property and fixing it up completely. So here's the key thing to get. Because you're taking on that renovation part of the deal, your smaller initial investment can bring in a much bigger return. Once the property is rehabbed and rented out, it's projected to bring in a 15% annual return on that 50 grand. That is a huge jump up from the turnkey model. But honestly, that 15% return, that's just the start. The real power of this traditional model, according to the source, is in the flip. This is where you can see some seriously impressive returns. So let's walk through exactly how that process works. The whole flip is managed for you from A to Z. You put in the $50,000,
The team on the ground finds and fixes up a distressed property. Then they stabilize it by getting a Section 8 tenant, which means reliable government-backed rent checks. At that point, it becomes a valuable turnkey asset worth over $83,000. Then they sell 90% of the ownership to a passive investor for $75,000, leaving you with an immediate $25,000 profit.
So what's the bottom line here? It's pretty incredible. That $25,000 profit on your $50,000 investment, that's a 50% cash-on-cash return. And you get it all in about 6 months. That is a wild return in a very short amount of time.
And this table shows you exactly how that profit gets divvied up. They use what's called a preferred ROI structure, which basically means you, the investor, get paid first. You get 100% of the profits until you've made a 10% return. Anything above that is split 50-50. So on a $25,000 profit, $15,000 goes to you and $10,000 goes to the network for making it all happen.
But wait a minute, what if you don't have $75,000 for a turnkey or even $50,000 for a flip? Does that mean you're just out of luck? Not according to our source material. They've got a third option that's designed to bring the barrier to entry way down, making it possible for almost anyone to get started.
And this is the number that makes it all so accessible. Through what's called fractional ownership, you can get started with as little as $500. It means you can buy a tiny piece of a bigger property, becoming a co-owner with a bunch of other investors.
So this option lets you own a slice of an already finished, income-producing turnkey property. You get all the perks of owning real estate. You get passive payouts every quarter from the rent, you get a share of the property's appreciation, and it's a super low-risk way to get your foot in the door, all without needing a ton of cash up front.
So, to wrap this all up, the model we've just walked through is all about delivering high returns with managed risk, and it has multiple ways in for all kinds of investors, from the seasoned pros to total beginners. And that really just leaves one final question for you to think about. Is your money working this hard for you?